What's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be going over all the dividends I received in the month of February 2022, taking a look at the overall portfolio, looking at some nice dividend increases that we got this past month, and also looking at some good buying opportunities that we took advantage of, and we'll jump into all of that right here. So this is my portfolio spreadsheet. I've made a lot of videos about it. You can check those out if you want to. But we can see we got actually 3 dividend increases this past month. So one of them was from Coca-Cola right here, and they increased from $1.68 annually to $1.76 annually. So that's about a 4.76% increase, which 5%, not too awesome for a dividend increase, but for Coca-Cola, I'm pretty happy with that because their dividend increases over the past 5 years have been right around 5%, so that's pretty much in line with what we would expect from a company like Coca-Cola. Cisco, next down the line here, they just increased it 1 cent per quarter, so from $1.48 per year to $1.52 per year, only 2.7% increase there, which I definitely would have liked to see a little bit more from Cisco. A little bit disappointing there, but sometimes it happens. And APD, Air Products and Chemicals, they had an increase from around $6 annually to $6.48 annually, which is super awesome. 8% increase from them. Definitely in line, actually a tiny bit below with where they've been increasing or how much they've been increasing over the past few years, but overall I'm pretty happy with that. And so we can see, just based on those increases, our dividend income is now projected to be around $53.58, and we'll come back and look at where that is, after we update the portfolio. If you want to pause here and look at kind of where our equities are at before we update this, you can go ahead and do that. But now we're going to head on over to Fidelity, and basically I have all my transactions for the month of February, so I have it filtered out from February 1st to February 22nd. So you can see all these transactions here, and we actually had a pretty decent amount of transactions, which we'll kind of see why that was in a little bit. But we'll just download this and just download it to our downloads folder here, and then we will go into our Python script here and actually just run that Python script. And what this script does is it is going to basically take that CSV file, and it's going to kind of parse through it and put all of our transactions into our spreadsheet and put all of our dividends into our spreadsheet, so we can see each one line by line. And then once all those are added in, then all our numbers in our spreadsheet will be updated. So once that script is done running, I'll come back and show you guys what we did this past month. So the script has finished running, and as you can see here, we actually, this month, we deposited $160 into the account. So normally every month we just deposit $60 towards the beginning of the month, but towards the end of the month, as we saw some correction, I wanted to invest some more money, and I just didn't have any more cash in my account, so I went ahead and deposited $100 into the account, so I was able to make some more purchases. And as you can see here, we did make a fair bit of purchases, and there's kind of 2 reasons there's a lot of purchases. So the first reason is that, as I explained, I think in my dividend update video for January, basically my new strategy is that if there is a company that I want to continue buying, even if it's not at a great price and I have not bought any of that company in over a year, then I'm going to buy just $10 or $15 worth once it's been over a year since I last bought that company and I haven't seen any good opportunities since that year has passed. So I sort of did that at the beginning of the month with some companies, and then towards the end of the month I started buying more because of the little bit of a dip. So I bought some Procter & Gamble, about $10 worth of that, JP Morgan about $20, Leggett & Platt about $20, Caterpillar about $30, 3M about $80. I opened a position in that company, so those are the first shares of 3M I've bought. Air Products and Chemicals about $45, Southern Company about $15, Pfizer about $10, Johnson & Johnson about $25, Coca-Cola about $15, Cisco about $15, Carrier Global about $15, Aflac $15, and Amcor $10. So in total this month, I invested about $323 into all these dividend stocks, which is super exciting. I would love to, be investing that amount regularly, but at this point, I don't think I want to be putting that much money into the portfolio just because I want to have some other money available to do other things with. And the dividend portfolio, isn't my top priority right now in terms of investments, I would say. I did not make any sells, and then here's the dividends that we received. Caterpillar and Procter & Gamble, about 50 cents from each of those. AbbVie, $1.94, almost reaching that $2 mark. That'll be exciting. Air Products and Chemicals, about 78 cents. Carrier Global, 17 cents. Apple, a measly 11 cents, and AT&T, $1.36. So total for this month was $5.30, which is pretty exciting. So now we'll look at the spreadsheet some more. And as you can see, these are pretty much all the transactions for the month. I'll kind of highlight this month's transactions for you here if I can. So pretty much up to here, which is pretty incredible. All these transactions, obviously you can see some like 3M I bought multiple times. Similarly with Air Products and Chemicals, Leggett and Platt. So, I bought a lot of these companies more than once, but so that's kind of why it shows up as more than it may seem, because, in the script that I showed, those are all consolidated, these buys and amounts based on ticker, whereas these are line item transactions, so they're not consolidated. Then if we go over look at dividends, our dividends from this past month are entered right here, which is pretty exciting. And if we go over to the monthly dividend chart, we can see we got $5.30 in February, which was just below actually the dividends we received in November of $5.37. And I'm thinking that was probably just because of the weirdness with JP Morgan. So if we go back and look to November, we will see, well, it looks like JP Morgan. Yeah, so JP Morgan, I think their dividend like pay date is technically October, but sometimes that's on a weekend, and then basically that rolls over into November, so I counted it as November. Whereas this month, this time JP Morgan paid at the end of December or end of January, so that didn't get counted for February. So that's kind of the reason. We saw a little bit of a dip there, but overall, I think there's still growth because we received more than 7 cents in dividends from JP Morgan. So overall, that's super exciting to see, and we're seeing an uptrend. The cool thing I think is that previously, basically I had 1 month out of the quarter that paid drastically more than all the others, and now as you can see, sort of these 2 months, the second and third months of the quarter are both about equal, and those are larger amounts. So I think that's exciting that over time we're getting more consistent across the months, which in the long-term game really isn't that big of a deal to be consistent across each month of the quarter, because some companies are just going to pay out some months, and some companies will pay out the other months, and it's not that big of a deal. But I do think it's cool to see that consistency sort of level out some. And by the quarter, obviously only 2 months gone in this quarter, we're at $7.76, which is pretty much the same amount we made 2020 Q4. So about a year ago, and a little bit more than a year ago, year and a half ago. And that's been only 2 months out of the quarter, not 3. So be excited to see if we can get over $12 for this Q1 of 2020. And obviously on the year, just $7.76 looks pretty pitiful, but we're honestly almost halfway to what we got in 2020 of $20. And we're a good way to beating the 2021 amount of $38. So overall, I think that's pretty exciting. And it looks like this ran automatically, or maybe I ran that, so I'll run it again for the beginning of March and end of February, and we should see this update in a second. I don't know, my internet seemed to be a little bit slow today, so but that's pretty exciting, which I actually have not looked at yet, but the dividend income after we updated the spreadsheet jumped all the way up to $61.81 projected annually, which is awesome. That's very exciting, which is a 16% growth. And the dividend CAGR dropped a little bit to around 7.5%, which 7.5% is not bad. I really want to keep it closer to 8%, but At the end of the day, 7.5% is still pretty good. We were back in the 6.5 to 7% range, so I'm definitely happy that we're up above 7% now, but I would really like to try to keep it near 8%. But with some of the deals I saw, I just wanted to pick up some of the companies that, even though they didn't have great CAGRs, they were at good valuations, and so I had to take those opportunities. So if you look at the overall summary, the value is around $2,218 with an annual dividend income of $61.81, and the dividend yield is at 2.85%. And just so everyone understands, the dividend yield is not based on any cash I have in the account. So right now I have $53 of cash in the account. So it's just dividing the annual dividends divided by the sum of my actual equity in positions. So technically speaking, it would be a little bit lower if you included the total value of the account, including cash. The dividend yield would be a little bit lower, but just wanted to be, I guess, transparent there. You can see our equity by sector. I forgot to look what our cash percentage was before the update, but I'm guessing it was probably somewhere in the range of 5 to 10%, and now it's down at 2.4%. So definitely looking forward to getting some more cash into the account in a few days when my monthly deposit comes in, and then I'll be able to make some more buys. I still have $50 left, so still some opportunity there, and I think the market still could give us some more opportunity in terms of correction. I honestly don't think it will go down that much more, but I think it definitely could. So it's something I'm prepared for, I think I would say. I have been criticized in the past for being too heavy in healthcare, financials, tech. Maybe not criticized, but just pointed out that could be a potential flaw. But for me, like the sector allocation, I really don't try to pay too much attention to that, or I try not to aim for a certain sector allocation all that much. I definitely don't want to have my entire portfolio in one sector, but at the same time, I really do not worry about it that much. Like 20% in one sector really does not seem like that much at all to me. So I have 20% in healthcare, about 19%. So honestly, the reason for that is just because of how much I've been buying AbbVie, and because of the great discount I was able to get it at just a few months ago, and now it's I was able to buy a lot at a very good price, and now it's at a lot higher price. So that inflates that position. So overall, I'm pretty happy with how February went. We received some great dividends in the portfolio. We made some great progress in terms of adding to our positions with the addition of 3M, and we were able to take advantage of some of the market volatility and downward action we saw in the overall market, and make some buys on companies that I thought were at a very attractive valuation. So let me know how you guys did in the month of February, how much you received in dividends. I'd really be interested to hear that down in the comments below, and just want to thank you for watching to the end of the video, and I'll see you in the next one.